Well, Yolanda, we're seeing another nice rise on the markets today, and again, it appears to be the big mining shares that are driving the momentum.
Yes, Stephen, we saw a commodity upgrade forecast for the for commodities into 2010. So that driving, we see copper prices in Asia, driving demand there. So overall positive. We saw the US manufacturing numbers coming through quite nicely, and housing starts in the States also coming through quite nicely, spurring demand and putting a bit of life back into the market's positive momentum.
So do you think some of the concerns that were in the market for January, the Greek debt problems, China reining in its bank lending, have they really faded into the background at this stage, and we're focusing back on the positive news again?
Well, Stephen, one would have looked at that. I think we've got some positive news out from about Greece. If one looks at the market going forward, the market seems to focus on the good news, forward thinking, and if we're seeing these upgrades coming through in terms of forecasts for the year, and then we've seen a very good result season out from the States with 80% of the companies beating expectations, by some higher than 10%, it's starting to build a bit of momentum. And then of course Greek being supported in terms of their budget also really supports the positive feeling.
Well, just taking that perhaps to the South African earnings season, which really kicks off in earnest tomorrow. We have Goldfields coming out with its results, and that's followed fairly quickly by results from some of the big hitters like Anglo American and others like that. I mean, are we going to be seeing the same sort of thing in South Africa, or are we still a bit behind before we start to see these earnings beating expectations?
Stephen, we're seeing a lot of upgrades coming through in terms of our commodity counters into the new year, and that following probably from the upgrades we're seeing internationally from our international brokers, and demand coming out of China. We have a bit of mixed bag in terms of your general retailers. They're being downgraded slightly. I think we're probably going to have a mixed bag, but obviously the high commodity prices off a low base from last year are definitely going to bode well if our commodity companies have been able to keep their costs flat. We could see some nice earnings coming through in the season.
You talk about commodity prices. We have oil going up to above $76 a barrel for Brent crude, and of course just a week ago it was hovering around $71 a barrel. So quite a quick move on that oil price.
Yes, Stephen, all through from indications that we're going to see demand increasing from the States. Your manufacturing numbers, we've had really good manufacturing numbers out. The Eurozone has good manufacturing numbers, indicating we're probably going to see demand follow through in the new year. As well as we're seeing that speculation from China is that they're going to keep their demand for oil at the same level we've seen in the last period. So definitely a demand-based rise in the oil price.
Of course, it doesn't bode very well for our petrol price going forward. We had petrol going up by 18 cents a litre at midnight last night. Of course, at the same time, we do have the rand strengthening a little bit, so that should help cushion it for us, shouldn't it?
Yes, Stephen, we should see, if one looks at the actual price, I think if it stays at this level, we could see with a stronger rand that we won't be affected that much. But going forward, if we do see Brent spot go through the $80, there could be some concern for us in the long term.
Well, we did have one small company coming out with quite a big rise in its share price, Coal of Africa, up sharply yesterday, up another 7% at one point this morning. What's driving this Coal of Africa share price?
Stephen, they came out last night stating that they've won new mining rights to mine a new section, and that really is a nice coal story play. They're going to be able to provide more coal to Eskom and get involved in more IPPs. So very good for the stock, definitely going forward. And they have come out to say that they're going to be taking up those rights, and they're going to start immediately, which will be profitable for them in the next year.
And of course, we had news this week that there's another coal company about to list on the JSE, and so the outlook for coal companies pretty good at this stage, I should imagine.
Yes, Stephen. The whole coal story is very much demand. Demand supply story. There's far more demand than there is supply. So any company that moves into that space that is able to and provide to Eskom and other third party contracts will benefit in the next 4 to 5 years.
Of course, we have the Bank of England and the ECB beginning their interest rate meetings today. We had the Bank of Australia yesterday, or the Royal Bank of Australia yesterday, keeping interest rates unchanged for the time being. So maybe the Bank of Australia turning a bit more cautious at this stage. What would you expect from the ECB and the BOE?
In terms of euro, I think euro has its own set of problems there, so probably more caution ahead. For them, the Greece, Spain, Italy, rates are most likely to keep flat for the rest of 2010. And we're probably going to see that globally. We might see something come out of India in terms of rate increases. Australia is going to, they've come out to say that they're looking, potentially they will be increasing rates later, but I think they want to see the effects of the rate hikes that started towards the end of last year, to see how it affects the consumer on the street. They don't really want to kill that economy, even though they have been seeing signs of growth, but cautious ahead of that.